Hey folks, just as we were getting ready to come on air, apologize for being a couple minutes late, but as we were about to come on air, Apple announced that they are opening stores in the United States starting next week. Bang! Yes, that's a sign that we are coming out of this. Let me get a little more light here. There we go. Thank you, Sting, and thank you, Apple. Boy, that's big news, folks. All right, so let's get into today's 3 at 3. Yeah, that'll boost up my energy level a little bit. Let's see. 3 at 3 brought to you by Jon Najarian and, of course, the rebels over at marketrebellion.com. You need to know more about that? Just go to marketrebellion.com/UOA. That's marketrebellion.com/UOA, which of course stands for Unusual Option Activity. All right. Disclaimer just very quickly says that this is for educational and informational purposes only. Let's go. So let's start off by looking at some of the trades that we were taking off or profiting from today that we have just told you about, like this one, which was from yesterday. FireEye. They came in and they were buying the May 11 calls. Bought them fast, paid 33 cents up to 55 cents. Since every option is for 100 shares of stock, that means 33 bucks to 55 bucks per option. So a 10 lot would cost you $550 if you had to pay that 55-cent offer. Stock was $10.85 at the time. Well, stock moved up. And as the stock moved up, these calls went all the way to $1.46. So it wasn't quite a triple, but it was more than a double. Because if you were somebody who bought these, as I did yesterday, you were a happy camper today and taking profits. And these are options that expire next week. I took over 50% of them off today. And let's see, if they pull back down to $1, I'll probably dump the rest. But otherwise, I'm going to let them work for me next week. Let's get to another. Pinterest. This is also from yesterday. Bullish call buying. Pinterest was at $18, give or take a couple pennies. They bought 5,700 calls, the 1850 calls, so 50 cents above where the market was trading. They paid 50 cents, which is $50, or 74 cents, $74, for each one of these options. So a 10 lot would have cost you $740 on the offer if you waited and paid 74 cents. All right. Pinterest today traded all the way up to $19.70 some odd cents. Bang. So it's up over $1. That's 5% rally. So again, let's say you're somebody who maybe bought it near the close yesterday at $18.73. You could make $1,000 on a $19,000 investment. Math is pretty simple there, folks. 1,000 shares times $18 would be an $18,000 investment that turned into a $19,000 investment. So you made $1,000 on roughly an $18,000 investment. So great. How'd you do in the options? Well, let's see. So they were buying those calls for 50 cents to 74 cents. Where'd they go today? Oh, $1.50. In other words, a double, 2x. That's why you trade options, my friend, because all you put down yesterday potentially was that $740 for a call that gave you the right to buy the stock at $18.50. And those calls today went to, as you see on the screen, the red arrow, they went to $1.50 today. They traded about 1,800 contracts, so you could have done that. And even if you only got $1.40 where they're trading right now, let's see. So you paid 74 cents, you almost got a double because they went to, that'd be, I can do the math, $1.48. They did go to $1.50, but let's just say you said, you know what, 75% in one day, I'm going to take that and run. Now, what did I do? Well, let's look at the time frame of these options. They expire next Friday. They're the regular May 1850s. I took off half. I took off half because I'm into these for about 65 cents. As they traded to $1.30, I took off half. Now they're 10 cents in my face. I could have sold them for $1.40. Oh well, let's see where they go next week. And perhaps I'll get a chance to sell 19s or higher against it and lock in a spread for perhaps even a credit. Again, this is what you can do. You can learn more about it at marketrebellion.com. Go check it out. All right. Datadog. Third one. From when? Yesterday. Yesterday, Datadog, bullish call buying. Stock was 48 bucks. And as I said, they were buying the May 60s. Now, nothing against buying those May 60s. Look, they were 10 cents up to 30 cents. That means 10 bucks up to 30 bucks. What did I do? As I told you, I bought the 50 calls, sold the 55 calls. That puts me into a $5 bull call spread. So, little thing about one-to-one spreads, folks. If you buy that spread for, I think I paid, I can't even remember, but it wasn't much. But if I paid $1 or $1.50 for it, that spread can only go to 5. Why, John? What if the stock runs to 60? Well, because I have the right to buy it at 50. I've given somebody else the right to take it from me at 55. So the difference between these two strikes is all I can make. That's the maximum profit, which is a very nice return. If indeed I turned $1.50 into $5, I have a $3.50 profit. I'd take that, wouldn't you? Now let's see where I went today. Well, as you can see, it went through 52 today. And then it pulled back, but it's still basically $51 a share, $3 higher than where we talked about it yesterday. That'll work, right? Let's get to some fresh meat. 3 at 3. We're getting into the fresh stuff. Fresh stuff, Twitter. Why? Because, oh, there's a fill. All right. I like that. That's a nice fill. Thank you, market. Twitter, folks. TWTR, as you see, back to back, we had 2 quick trades in here. One was they were buying the end of May, the 29 ahead of May on that screen there, folks, tells you that's the expiration. If it just says May, that's regular May expiration, which would be next Friday. But this says 29th of May expiration, 35 calls. They bought them for 11 cents up to 16 cents. Now, that's a bit of a run. You know, that's $6 higher than where the stock is. Stock was $29.30 at the time. Then they came in just moments later and bought the May 33 calls, a lot closer, still about $4 or $3.70. Let's call it $4, out of the money, above where the stock is trading. So these are both out of the money calls, and they are both May 29th expiration. So this is the 8th of May. So then you've got the 15th, then you've got the 22nd, then you've got the 29th. So this is 3 expirations into the future. Again, 15th, 22nd, 29th. So you basically have 3 weeks to be right in this one. They were buying a lot of them with the stock at $29.32. There's the stock. It moved up to $29.87. It's trading at the highs of the day right now. So if you were a subscriber to Market Rebellion /UOA, you could already be probably taking some profits in here. But if you're just joining us, you still have time. These options expire the end of May. Just keep them on your radar. Let's see where it goes. Second trade of our 3 at 3. Take a look at Leg, L-E-G. This one is $28.60, or that's where it was at 11:09 today. You see all the information there on the screen. The time that it was posted to our blog, the symbol, the bullish call buying, because we're going to define for you, is it bullish call buying, bearish call selling, bearish put buying, or bullish put selling. Any of those things would go into that column. The price of the stock when we did it, $28.60. They did 5,000 of the May 30 calls. These are $1.40 out of the money. Again, they expire next Friday. This is regular May. Expires next Friday. So those May 30 calls, they paid 40 cents to 55 cents. Again, every option is for 100 shares of stock. So that means $40 per option. So that'd be 400 for a 10 lot. That means that if I wanted to simulate a 1,000 share position and I bought 10 of these, that would be like that. I bought 10 of these calls, that would be $400. If I had to pay 55 cents, that would be $55 times 10, $550. Now let's look at that. $550 versus $28.60. So 1,000 shares basically take $28,000 out of your account. It would hold that $28,000 in that option, or in that stock. You would own that stock. On the other hand, you can, for 1 week, have the upside of the stock from 30 on for, let's say, $55 per or $550 to do a 10 lot. $550, $28,000. You tell me. That's why I trade options. All right, it's already moved up. Again, this was when it was 28.60. Now it's 29.36, trading near the highs of the day again in this one. And look at where it was. May 5th, Cinco de Mayo, Tuesday this week, it was $34 stock. Does it go back there next week? If it goes back to 32, these calls would be worth $2. You paid 55 cents for them, double nickel, 55 for these calls. That would mean you have made 3 times your money if it goes back to 32. Now, again, I think you are smart to be learning about these before you trade them. If you want to learn more about it, go to, again, marketrebellion.com/UOA. All right, let's hit our third of our 3 at 3, and it is Lyft. So Uber today had some numbers, and Uber traded up nicely. Lyft is also trading up. It's 32.85. Somebody decided to sell 10,000 of the June 30 puts. Now, I'll point out something that I don't usually point out, and that is that the open interest was 1,600. So what does that mean? That means all the options that have ever been bought and sold in here total 1,600 contracts as far as held overnight, because there's always a buyer and seller for every option. So 1,669 means that people have traded and that somebody is long 1,600, somebody is short 1,600. That's what the open interest means. Now, this is fresh. This is new because they did 10,000. So when we look at this next week, it will very likely be somewhere in the 10,000 open interest range, not in the 1,600 open interest range, depending how many more they trade throughout the session today. But this is an opening trade. Somebody elected to sell on the bid 10,000. That's a million share equivalent in Lyft. They sold those 30 puts. That means that they have an obligation, because sellers have obligations. Owners have rights. You have no rights when you sell. When you sell this thing, you are taking on the responsibility of buying, in this case, Lyft, if it falls below 30. If this owner of this put chooses to, they can put the stock into your account. And for that, you collected a premium, much like Warren Buffett does with his insurance companies, like Geico. So he's collected a premium. He owes you for your car, less the deductible, the premium, if indeed you choose to exercise that. In other words, if you want to file a claim against Mr. Buffett and Geico. So in this case, somebody selling a lot of puts in Lyft is bullish. They think it's staying above that strike price. How much did they collect? $183 per option, as much as $190 per option. So a 10 lot, they have $1,900 that they keep if the stock stays above 30 between now and June expiration. That's their bullish trade. And where's the stock? Well, 32.85. Still, Lyft is 32.88 right now. And you see that gap to the upside from May 7th. May 7th, the stock was more or less, give or take, $26. And it gapped all the way through 30. And now somebody gets in and sells a bunch of puts. That's worth noting. This is also worth noting. I will be speaking Tuesday next week with my buddy Mark Lepresti at the Money Show virtual event. You can see all about it if you go to moneyshow.com. It's free. It's a free event. We'll be speaking 11:20 a.m. East Coast time. So if you're on the West Coast, that's an early rise, I guess. I'm up always a lot earlier than that, but 8:20 on the West Coast. And it's a half an hour, and we're going to be talking about alternative data and how we're developing alternative data into exactly the sort of stuff that we're talking about here with unusual option activity, which, by the way, is also alternative data. Thank you for joining me today, folks. I hope you enjoyed the presentation. And if you'd like to join us Monday, we've got Jim Urio, who's going to be joining us from TFM, I think. Anyway, Jimmy is a great guy, 30 years as an institutional broker of options and commodities. And Jimmy is going to be joining us, and I hope you can join us. If you want to learn more about anything that we're doing, just go to marketrebellion.com. You'll see coaching, mentoring, educational stuff about stock, options, futures, crypto. And if you want to learn specifically about trading options like the kind I've detailed here, go to marketrebellion.com/UOA. Thank you. Having said that, I hope you have a great weekend, everybody. Let's let Sting take us out, shall we? Thank you, folks. I hope wherever you are, you're staying safe. Keep in mind that news I've opened with Apple reopening stores across the USA. Yes, love that. Never lose your faith on people on TV, would you?